Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1288A, and today's date is May 24th, 2017, and the title of the episode is Warning Signs Are Everywhere, Even from the Central Banks. Let's get into the economic collapse financial news. Now, as we look at this economy, we are seeing warning signs all over the place. I mean, when you look at everything that we've been looking at, we can see that the economy, at this point right now, here today, it has not improved since 2008. What has improved? Well, the stock market, the printing of currency. I don't mean the actual printing, I mean pushing the button. The wealthier got wealthy, and there are more people on food stamps. There are more people that have fallen off the employment wagon. There's more people looking for jobs. Retail is contracting. Housing is declining. Corporate defaults is on the rise. Auto manufacturing, they're in trouble. Auto parts, that is in trouble. Everything that we've been looking at has been accelerating. It hasn't been slowing down like, hey, you know what? Yes, in 2016, we had 500 stores closed, but in 2017, it's only 200. Not bad. No. 2016, we had thousands of stores closed. The first part of 2017, 3,500. And 25 bankruptcies. Projected to be 50. This is not getting better. It's getting worse. And as we can see, small businesses, well, they've been shrinking since the 90s. Now, of course, the United States is the country of opportunity, where you can start your own business, you can grow it, and you can make a living and live a happy, nice life. But things change. Remember, the system that we're under right now, the central banking system, it's not designed to help the everyday person. It's not designed, especially with all the regulations that they're passing and all the taxes, it's not designed to make you successful. Yes, in the beginning of the system, it was. Back in the 70s, the 80s, when things were just all coming out and they were creating currency and there were high interest rates and the value of the dollar was decreasing, and that's why they raised the interest rates to level it off. And we saw inflation. People thought, wow, things are really great. I bought a house for $50,000, now it's worth $250,000. My income that I was making, I started at $5,000. Boom, it was pushed up to $25,000. This is incredible. Well, that time has come and gone. Start a business. People were getting credit cards then. People were taking out loans to purchase homes. And it got better in the 80s. Interest rates came down. Things got even better. Credit was completely accessible. Went into the 90s. Then things started to change. And that's what we're seeing right now. And America was the best place in the world for those who wanted to work for themselves. Our free market capitalist system, it created an environment which entrepreneurs and small businesses greatly thrived. But everything has changed. And the number of self-employed Americans is now lower than it was in 1990. And if we look at this, we can see in April 1990, 8.7 million Americans were self-employed, but today only 8.4 million Americans are self-employed. And that number is continually dropping. Why? Because we have the retail apocalypse. And what's not being reported is all the little tiny mom and pop retail shops that just can't make it. All we're hearing is the big chains that are going out of business. Now remember, our population, it has grown. It's much larger right now. And in the 90s, there was 249 million people living in the United States, but today there's 321 million. So what this means is that the percentage of population that is self-employed is way down. Now, according to economist Tim Kaine, the number of startup jobs per 1,000 Americans has been declining for several consecutive presidential administrations. Bush Sr., 11.3% decline. Clinton, 11.2%. Bush Jr., 10.8%. Obama, 7.8%. All in decline. Again, Every single sector that we're looking at has not been improving, except for the stock market, of course. We talked about new home sales, where they've declined. Now, existing home sales, they have dropped by 2.3%. Now, let's think about this for a second. We are at the end of May. Housing sales usually ramp up starting in March, going into April, May, and by the time August hits, they start to slow. This is the hot season for real estate, no pun intended. This is when the sales come in. We're supposed to see these percentages skyrocketing right now. And if you go back to my reports last year, we saw the same exact thing. Actually, I think I used the same exact joke where I said this is supposed to be the hot season, no pun intended. And what's happening right now is interest rates are creeping up, applications are completely falling, and in the 20 cities where they monitor the home prices, they're showing that, yes, home prices are increasing. Now, that's not happening everywhere, but they like to put that out there that, well, the housing market in these certain areas, they're doing well, home prices are still ticking up, and everywhere else we don't want to report on. Well, everywhere else, that's the majority of the country. And if we look at the percentage of sales from a year ago, the change in sales, we can see, according to Price, that things are really, really bad. I mean, prices from 0 to 100,000. I don't know any house that's from 0, but $100,000 or less. Down negative 16.8%. Houses from 100 to 250,000. Down negative 6.3%. And the only homes that are actually doing well is in the upper brackets, where we're looking at 750,000 and over, where they're up around 12%. Again, what we're seeing is a shift in wealth, and everyone else in between, it's not helping. And what we've been seeing is a decline in real estate, a decline in retail, a decline in auto sales. We're seeing a rise in corporate defaults. We're seeing a rise in the amount of commercial real estate that's out there. And this whole thing is going to be disaster. Now, it's not just happening here in the United States. Canada, they have bubbles all over the place. They're deflating. Throughout Europe, Australia, actually the ECB was out there. And they mentioned something very interesting. They said, well, there's an excessive exuberance in house prices. And they're saying that, well, houses in the European markets, they're being driven by offshore buyers, that this could spread to other areas in a ripple effect. Separately, the ECB also said debt sustainability concerns have risen in the past 6 months amid a potential increase in yields and political uncertainty in some countries. Now, basically what central banks like to do is they like to leak out some of these warnings, but it never hits the main corporate media. It's in the back channels, and they keep this there because when the crisis does hit, they can say, well, we did have the warning out there, so you can't blame us. And this is what they do every single time. Even though it's not out in the corporate media, they're going to still tell you that everything is fine. But behind the scenes, behind what is going on, they put out these little warnings, and they hope that nobody's really looking. And what is really happening right now is we're seeing warning after warning after warning. Now, something very interesting, and David Stockman actually mentioned this, that the government would not be able to make it through August. And we already see White House Budget Director Mick Mulvaney. He is warning lawmakers that they might have to vote before they leave on vacation in August, because they leave August 1st. They don't come back until after Labor Day, because he's saying that we don't have enough money to make it through August. We don't have enough tax receipts coming into the government, which is very interesting because this is exactly what David Stockman said. And as we can see that we have a major problem here. The tax receipts coming into the government has continually declined. Why? Even though we're at 4.4% unemployment, we're at full employment. No, what's happening is people are losing their full-time jobs. They lose their full-time jobs. They're not making the same exact money. So that means less taxes are being paid. Now, those people who are falling off the market, they're not making anything. Those people who have taken part-time jobs, most likely they're making a quarter or half of what they were making. So what we're seeing right now is less money coming into the government. If there's less money coming into the government, that means they can't pay for all these programs, which means they have to borrow more, which means the situation gets worse and worse as time goes on. And we can see that eventually what is going to happen as more and more people lose their jobs and more retail stores close and corporations lay off, they're not going to be able to borrow enough to pay for any of this because the tax receipts are going to continually decline. And just look at your own household. Think about this. If your income continually drops every month and your expenses go up, how long do you think you could survive? How long do you think you can keep your 1 or 2 cars? How long do you think you can keep your apartment or your house, your Netflix account, your Amazon video account, your gym membership, and everything else? How long do you think you can keep this going? Not long. That's what's happening right now. And we can see that the Fed understands that this whole system can't stay operational the way it is right now. And this is why their mission right now is to bring the economy down under Trump, because they need someone to blame. And eventually they'll probably blame it on him initially, and then maybe they'll show some type of cyber attack or something hitting the financial institutions because they need a big country, a big group to blame this on because they need to bring us to war. That's their eventual goal, to cover up everything. So they're not blamed for this because they want to start this whole thing all over again. And we can see that the Fed had their meeting. Their minutes came out. Of course, they're saying the first quarter is transitory. It's an anomaly. Don't worry about that. The economy is going to really take off in the second quarter, which we're not seeing at all. Actually, it's getting worse. Now, they might manipulate even further. They might throw some soybeans at the GDP number like they did right before the elections to show that Obama had a strong economy. But whatever they do, it doesn't matter because the manipulated statistics that they're throwing at us, they're fake. But what they are doing is they're setting it up to raise the rates again. Now, just raising it the couple of times they've already done, it looks like it triggered something in the economy because we're seeing it accelerate. It looks like they might raise it again in June, which will really accelerate and bring the system down because it looks like they are running out of time and they want to be in full control of the takedown of the system because this way they can point the finger. They can tell you exactly what happened, just like in some type of terrorist attack. I mean, they have the entire story laid out. We know exactly who they are. We know exactly where to look for them. And we capture all these people within a couple of days. I mean, the story is written. You know exactly what's going to happen. They know exactly where they are. There's no investigation whatsoever. It's done. It's almost like a cyber attack where they say, oh, someone was cyber attacked 2-3 days later. We know exactly who it was, how they did it, what the code is. They know exactly everything. This is what they want to do with the economy. They want to have their story. We know exactly how it came down, who was to blame for it, and this is what they're doing. Now, the Fed, they are also broadcasting warnings. Now, not on the corporate media. You're not going to see this on CNN saying, hey, the Fed is warning that there's vulnerabilities. They're seeing elevated asset valuations, and it poses a risk to financial stability because that is their warning in their papers. And you're not going to see this on the corporate media because they don't broadcast that stuff. They'll tell you the economy's doing fine, but they need this in some type of report to show people later that, no, we knew this was going to happen Because when you look back in time, this is what they're going to show. Even though you're going to remember not seeing any of it, or saying that we don't see any of this. Even if we go back to 2008 with Ben Bernanke, where he says they're not forecasting recession, and you look at their papers, they show that, yes, something was going on. They show that there was a problem. They know exactly what's happening. They cover themselves. That's what they're doing now. They understand, they realize that things are breaking apart. And we have to remember, Bank of America, based on 20 most widely used valuation metrics, the S&P remains significantly overvalued on 18 of the 20 valuation metrics. So what is happening right now is we're seeing a push to bring down the system. Now, on the other side, Trump is out of the country, but his push is to bring down the system. This is why all the bubbles are being blown up. This is why he's looking at all the different land and all the natural resources, looking to drill oil to make sure that we have the ability to sustain ourselves, because we're not going to be able to get products from anywhere. It's going to be very, very difficult when the whole system collapses. All these trade deals are going to have to be renegotiated. Everything has to be redone because the dollar will not be involved with this. It won't be the reserve currency anymore, and giving countries dollars, they're not just going to give us their products. It's not just going to happen like that. We're going to have some type of trade. And this is what he's preparing for. Now, he's pushing his budget. We know this is not going to pass. And he's showing that, listen, we have two choices here. It's either we cut like there's no tomorrow, and people are going to have to go out and fend for themselves. And I know this economy is not driven to help people. And this is why the central banks, this is why the government, this is why they like people on all of these type of programs. It keeps them quiet. Think about if we didn't have these programs. You think people would be picketing and very upset that they can't live? I mean, think about it. 47 million people on food stamps. Before the Great Recession, it was like 27 million. Now it's 47 million. Maybe it's a little bit less, 44 or something like that. But it's much, much higher, and it really hasn't decreased. If you took all those people out of the program, get rid of all the entitlement programs and everything like that, how do you think people are going to react? You think they'd be upset? You think they'd be picketing? You think they'd be angry at the government and what they have done? This is why they have these programs, to keep everyone quiet. You want to keep receiving the money? Keep your mouth shut. Be happy you're getting it. Now they try to make it seem like, well, we're helping you. People depend on this. No, you know what people would rather have? They'd rather have a great job, great health benefits. They rather support their family, and they rather live a life where they can depend on themselves. But people don't want to see this. So when the system comes down, you will need to depend on yourself, because the government will not be there. All these programs will disappear, and you're going to have to figure it all out. And that's what everyone's going to have to do. Now, in the beginning, you're going to have food, you're going to have to water, supplies, medical supplies, gold, silver, cryptocurrency, cash on hand. Cover all bases and make sure you are ready for what is coming. Listen, everyone, thanks a lot for listening. Be well.